I'm happy to be here. Today, I want to talk to you. I want to be really on point and talk to you about really an important element that I have seen all over the internet, on YouTube, on LinkedIn, on Facebook. Everyone's talking about self-employment, on actually not even self-employment, but what's the loophole on Airbnb rentals? So we hear the vibe on, hey, there's this thing that we can do if you are renting, on Airbnb or VRBO, you can deduct the losses. That has been going on for quite some time now, and people are like, I'm going to take the loophole. So I want to talk to you today about the other side of the coin, right? So every time you have a tax issue, there's typically more implication than just one facet. There's more things that happen when you have a benefit. A benefit comes with a responsibility. So on this case, when we have the loophole, what is being advertised on the internet on Airbnb rental income, that comes with the other side of self-employment tax. And there was a ruling. The Chill Advice, the CCA, had a ruling on the 23rd of December in 2022 on a couple of cases on how they rule on rental income on Airbnb. And I'll go over the issue really, really briefly so you kind of know what's going on. And what I want you to know, it's really one very elementary item when it comes to rental income. The basic rule is that when you have rental income and you are not a broker, you are subject to the passive rules. What does that mean? That means the income is passive income. There's no self-employment tax on it, and you are limited by the passive limitation rules, right? So if you have, the income, you can deduct maximum $25,000 worth of losses. What does that mean? That means that if you are renting, any type of house, Airbnb or long-term rental, you can only deduct $25,000 as losses, but you are subject to tax, ordinary income tax, to all the income that you make and the profit. Well, here's the other side of the coin. If you're a broker dealer, then you are considered that you're in business. You have income, which is subject to self-employment tax, and you can deduct all your losses, and you get to be taxed on all your income, including self-employment income. So this is exactly what this ruling did. There were a couple of elements. So I'll give you the two patterns. So in the first case, the taxpayer in question was that one individual who owned and rented out a furbished beachfront vacation property via, I think, Airbnb or VRBO. The taxpayer was not a real estate dealer. Okay, we're not gonna, like, that's a huge conversation to just do that, but it was not a real estate dealer. Okay, now what the taxpayer did, they provided kitchen linens, the kitchen items, linens, daily maid services, Wi-Fi, access to the beach, recreational equipment. And they also did prepaid vouchers to rideshare services between the rental property and some business district nearby. Okay. Now, pattern or the case number two, the taxpayer was the one individual who owned and rented out a furnished bedroom and a bathroom in a home via an online rental marketplace. Okay. Again, the taxpayer was not a real estate dealer. Okay. Now, the renters in this case, they had access to common areas of the home only to enter and exit the bedroom and bathroom. No access to the common areas as a kitchen, laundry, and all of that. Okay. So what happened with the CCA's conclusion? Okay. When you're not a real estate dealer, the net rental income from renting out living quarters, like, to live, is considered rental from real estate, and it's excluded from self-employment income. Okay, as long as you don't provide specific services to the rental occupants. So this is the piece where a lot of people forget. I want the loophole to deduct all my losses, but the year that you make more money, the income that you actually make will be subject to self-employment if you provide services to your rental occupants. That's the biggest piece, right? So the self-employment income exclusion for net rental income collected, if you're not a dealer, it's a statutory provision. Okay, it has nothing to do with providing services. It doesn't say that, but the IRS regulations, they state that providing services to renters, it can potentially cause you to lose the exclusion for self-employment income. So it's a double coin with two sides, right? Which one is beneficial to you? Now, my question to you, I don't want to overwhelm you with all that the CCA has ruled in this decision, and we can't use it as a precedent. But this establishes some key elements on how you can look at both sides of the coin, which one is beneficial to you. So my question for you is, which one would you benefit the most in 2023? Okay. And which poses one more question. If you know which one will benefit you, can you easily switch from being part of self employment, not self employment, in and out? Is that increasing your risk for audit? So I want you to really be aware on, the short-term rentals have been, a great piece of conversation for the last 1 year, right? 6, 9 months. And what happened is it has earned its place in, it's a really valid, strategy to save money if you're providing services. Now, can you provide services in 2023 and stop providing services in 2024? Definitely. So my encouragement to you today is really assess where do you sit? What kind of rentals do you have? And how can you set yourself up for success with providing the services or not providing services, or looking at how is your income being taxed in 2023? It's not something to take lightly, because you can save a lot of money by doing the right thing early on in the year. So I hope this is helpful to you. If you have no tax, you don't have a tax person to talk this through with, and you don't have a strategy on how to implement this, and where do you begin, and how do you decide? Do reach out to us, send me a message, and we'll get back to you, and we'll meet and have that conversation. So I hope this is useful. If you have any questions, or if you have conversations on this, or if you switch back and forth, I would love to hear your experience. If you've done either one, if you have income subject to self-employment tax, or you've done providing services and now you get to have higher losses on your short-term rentals. So I hope this is useful. Guys, have an amazing Wednesday and the rest of the week. And I shall see you again next week.